Hi everyone, welcome back to Corporate Decoder, the place where we dive into the documents so you don't have to. Today we're looking at AdvanSix, and let me tell you, this report is like a chemistry experiment gone right, or maybe a little too right. Did they cook the books, or is it all legit? AdvanSix just dropped their quarterly report, and it's got a mix of good news and some things we need to take a closer look at, from rising sales to debt management. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. First, AdvanSix describes their business. They're a diversified chemical company making stuff that goes into all sorts of things, from building materials to fertilizers. They've got 5 plants in the US, and they are trying to focus on safety, integrity, accountability, and respect. Let's jump into the numbers. Their sales are up. For the 3 months ended March 31, sales hit about 377.8 million compared to 330s, is a big jump. Now here's where it gets interesting. While sales went up, their cost of goods sold, or how much it cost them to make their products, actually went down. They spent $324.3 million this time compared to $33.9 million this time. Compared to $33.9 million last year, this means they are getting more efficient and making more money on each sale. They are making real money, but what about taxes? This year, AdvanSix paid $5.6 million in income taxes, compared to getting a benefit of $6 million last year. This change impacts their bottom line and shows they are now profitable enough to pay taxes. Now, let's talk about earnings per share. Earnings per share, or EPS, is a key number for investors. So how did they do? Their basic earnings per share is 87 cents compared to a loss of 65 cents last year. Diluted is very similar. Let's check their bank account. How much cash do they have? At the end of March, they had $8.3 million in cash. This is less than the $19 year tab at the end of last year, so they spent some money. But this happens all the time. Let's see who they owe money to. Accounts payable are up. They owe suppliers $23.89 million compared to $228.8 million at the end of last year. What about any potential problems hanging over their heads? They're upfront that they face lawsuits and disputes, but they don't think any of these will be a big problem. Here's something else of note: share repurchases. The company is buying back its own shares. This can be a sign that the company thinks its stock is undervalued, and it's a way to return value to shareholders. As of March, they bought back a lot of shares and have about 62 million left to repurchase. Revenue is up, that's good. For the 3 months ended March 31, 25, they pulled in about 377.8 million in revenue, compared to 356.8 million in 2024. Okay, let's dive a little deeper. The code, in which is code for the head honcho at AdvanSix, is looking at the numbers. These are costs like research, interest, taxes, and other little things that add up. For the reporting period, it comes out to about 8.9 million compared to a benefit of about negative $500,000 the previous year, so slightly up. What about their debts with suppliers? They use something called supplier finance programs. This lets their suppliers get paid early. As of March, they owed about 13 million to intermediaries. These debts are listed as accounts payable that we talked about previously. Here's where it gets interesting: intangible assets. What exactly are those? These are the assets that you can't touch, like brand names, customer relationships, and things like that. There wasn't much change to their goodwill, which is another intangible, but their other intangible assets are at 42.4 million. Leases are another cost. What do they pay for these? The short answer, quite a bit. They paid about 14.2 million in lease costs. From the looks of it, operational lease was the majority of it. Finally, capital expenditures, basically investments they make for the future. This year, they're expecting to spend between 145 and 155 million on this. Now, putting it all together, AdvanSix looks like it's on a solid path. They've boosted sales, cut down their production costs, and are still buying back their own stock. There are some risks, of course. Chemical manufacturing always has environmental and safety concerns, and a global economy could always throw a wrench in things. Also, they are dependent on some raw material, which may make their future production unpredictable if those disappear. But overall, AdvanSix seems to know what they're doing. What's your take on AdvanSix? Are they a solid investment, or is there something lurking beneath the surface? Share your thoughts in the comments. If you found this breakdown useful, smash that like button and subscribe. Don't forget to join our Discord community in the description. Thanks for watching, and I'll catch you in the next one.